Alright then, good morning folks. We head into European trade on Tuesday the 24th of October. We'll have a look across markets and we'll see what's going on. A little bit different to what we potentially expected yesterday. The assets that we were looking at kind of just rocketed off in the other direction back end of yesterday. So gives us a few things to think about. Obviously you can't get them all right. All your ideas can't be correct, but pullback in yields has been aggressive over the course of, since we recorded that video yesterday, US session yesterday, and back this morning. Solid downside in yields, which has its implications for markets across the board. But you can see Asian shares wobble, dollar soft as traders await economic data, so there's no clear fresh fundamental driver. Dollar edges lower ahead of key US data. Bitcoin back in spotlight, but don't worry too much about Bitcoin, to be honest with you. Dollar edges lower ahead of key US data, so maybe a bit of a position squaring kind of move, but obviously we've got to wait for the US data a little bit later on in the week. But Bitcoin leaps 2023 high on ETF bets that an ETF will get going. Rallied to an almost 18-month high on speculation that an exchange-traded Bitcoin fund is imminent. It will be a more regulated way of being able to invest in Bitcoin, or trade the price of Bitcoin, invest in the price of Bitcoin, whatever terminology you want to use. It's positive for the cryptocurrency space across the board. In fact, you can buy into it in a little bit more of a regulated way. Still doesn't have any sort of value and doesn't do anything for us, so ultimately doesn't really do anything in the real world. But at the end of the day, there's a more regulated way of investing in it. People will always want to invest in something. A lot of people that think cryptocurrencies are the way of the future. Really, that's just what we're looking at. Pullback in the US dollar, pullback in yields has sparked a bit of a rally in stocks. You can see US equity futures higher across the board. European, Asia Pacific equity futures, most of them higher everywhere you look. Commodities higher across the board. Bitcoin up 7.5%, Ethereum up 6%, positive for the cryptocurrency space, as I said. But stock index is positive, commodities positive, bond yields lower across the board, now in line with that pullback in the US yields, causing bond yields globally to push lower. The US dollar weak off the back of heavy downside in US yields, which is to be expected. So now pretty much the expected reaction that you would want to see. Then come over to your FX space and you can see your Aussie and your Kiwi higher with your stock indexes. And your Swiss franc relatively mixed, but US dollar lower across the board, and yields lower, stocks higher, dollar lower, Aussie Kiwi higher. Really the expected reaction you'd expect to see off the back of a bit of risk on trading. Now, does this actually mean anything as we head into the rest of the week? You can see the Aussie over the course of yesterday, you can see Aussie, Kiwi, Euro and Sterling all pushing to the upside. Cable extending gains to the upside off a bit of a lower than anticipated unemployment rate in today's session so far about 7 o'clock this morning. About 7 o'clock this morning. Slightly lower than anticipated. Unemployment rate, which is obviously a positive for the UK side of things. You can see dollar Swiss, dollar CAD, dollar yen all pushing lower, with your dollar index pushing lower. This dollar yen pushing lower came up to hit 150 back on Friday, came up to hit 150 again yesterday, and has pushed lower off the back of that. Reason being is these 10-year yields. This 10-year yield has extended losses to the downside so far in today's trading session. US, the 2-year yield pushing lower, 10-year yield pushing lower, both of them causing a bit of downside for the US dollar. Has provided with a bit of a bounce back in the S&P 500. The S&P 500 pushing slightly higher, bit of a bounce back end of yesterday's session, and continues to grind higher slightly over the course of the overnight session, but not massive moves in terms of the equity space. You can see the S&P, the Dow Jones, the Nasdaq, the Russell. Nasdaq holding up pretty well. aggressive rally back end the yesterday session and is beginning to push higher again. Tech stock earnings in the big tech stocks out this week expected to be somewhat positive throughout the remainder of the week. The DAX, the Euro stocks looking like they want to post little inverse head and shoulders in the S&P and the Nasdaq as well. So maybe some reversal patterns to spark a bit of a move higher. Again, is there a fundamental reason for this move? No, but 10-year yields, 2-year yields, both pushing lower is supportive for stocks. So we may potentially see a bit of stock upside, but I don't like flipping my bias. I don't like saying downside yesterday, turning today, and now all of a sudden they're going back the other way, and then it's like, oh, we'll buy it now. It's like it's not great analysis. I still think. Stock. This yield, the moving yield surprises me, to be honest with you. I mean, maybe it's priced in what we're looking for this week, but we got strong GDP figures to come this week. We probably got strong inflation figures to come this week. With those strong GDP figures, we're likely to get strong earnings, and all those things is likely to ensure that the Fed maybe not keep the foot on the gas instead of continuing to hike rates, but likely to keep yields somewhat supported and bonds somewhat under pressure. So, do I buy it just yet? I'm not 100% sure about it. I don't know if I go piling in long stocks at the moment. I mean, a few small positions, reduce your risk. Let's try and not miss out on a move. I would have preferred a move back lower. I still probably will back a move lower, but ultimately you got to do what markets are telling you. And if yields are pulling back, the dollar's pulling back, and stocks start to push higher, that's the side of the fence you got to sit on. Do I fully believe in the move? Not quite, but certain times, just to be in markets, just to get something on board, a small trade, less risk. Don't want to go full risk on a trade if you're not 100% on it, but that's the way markets are moving. So, I'd approach with caution. I will certainly be approaching with caution, but a few smaller positions in the direction of some of these assets may not be the worst idea in the world. As I said, do I fully believe in the moves? Not quite, with everything going on at the moment, but ultimately it doesn't matter what I think. Markets will do what markets want to do, and I don't really want to sit on the sidelines. It looks like a move may potentially be shaping up. So I still think into weekend probably rally gets sold back into, but I've been wrong before. I will be wrong again. If I am wrong, maybe a little small trade in the opposite direction might not be the worst idea in the world.
Okay, I hope that makes sense, and apologies for bringing in the market profile, volume profile.